Is market forming the top? We have seen a huge correction right from 14,700 levels to 13,600. We have seen for the first time since September 2020 that market has retraced or from the highs above 7% or more than 7%. So you might be thinking, should I book my portfolio or should I buy the dips? We'll be discussing this in our today's video, momentum moves on Nifty and Bank Nifty. What do we think Nifty should levels where Nifty might see a reversal or Nifty might see a top forming out? Myself, Rajesh Bhatia, Senior Research Analyst and Editor at Equity Master. So if you look at the historic move of January, there was always a tug of war between bulls and bears, and we have seen on an average it's been ending on a flat to negative side. And again, this month or this year as well, we have seen the same scenario. But for the Fab, it's the opposite. In the last 25 years, since 1996 to 2020, 15 years in the month of Feb, market have closed on a positive side, which means that bulls have ruled for 20 out of 15 years, and bears have ended on a negative note for 10 years. And if I look at the average gain of 25 years, it's around 1%, so 0.92 precisely on a positive note. So let's hope that bulls might continue to see a ruling in 2021 as well. But if you look at the 2020, 2019, 2018, last 3 years has been slightly led by bears. So coming on to seasonal line, yes, we think that probably this month could be of the bulls. Why? Now, if you look at the Nifty chart over here, right from the bottoms of March 2020, I have connected a trend line which says when markets are at support zone, and a crucial support zone, very crucial support zone of 13,550. Probably we might say a percent plus or minus. So I'm just taking at 13,500, 13,600 as a support band for Nifty. Plus, if I just look at the 50 days average, which has been tested after a long time on Nifty in the recent move, is also placed at 13,710, and we are very much near to that, though slightly close below those levels, but yes, we are very much near to those levels. Now if I just look at the support zone on the trend line, the 10 months trend line, which is very much important because the multiple support at the longer term trend line will be a crucial level to watch at in the coming week, plus 50 days average. Now if you look at the lower panel, the RSI, the relative strength index, again it is a sign of strength of a momentum, and this is also at a support zone. So we think that on the budget day, on the Monday or probably the next week, if these levels are held very strongly, I'm not talking about the intraday moves because on the budget day generally the volatility is slightly high during the intraday day, during the intraday momentum. So yes, it might see a break of those levels, but if those levels are sustained and not close below those market don't close below those levels, we might see an uptick. So but 30,500, 30,600 will be very crucial for bulls here to protect them, and we are slightly biased that this momentum might hold out. Now who can hold this rally? Okay, and if I just look at the momentum, my second chart is Bank Nifty to Nifty ratio chart. So what does this indicate that? And if you look at the Bank Nifty to Nifty ratio, what I've done is I've taken Bank Nifty price and divided it by the Nifty. And if you look at the whole month during the pre-September, the Bank Nifty was underperforming. We formed a double bottom formation on this ratio chart. The bottom box, if you look at we have formed double bottom. We have broken out of that range probably in November, seen a huge uptake. We are retesting those breakout levels again on Bank Nifty to Nifty ratio chart, which means that the retest are always a better entry level when it comes to the risk reward side. And for bulls, when there is a bullish breakout and retest happens, the bulls are in more favorable positions rather than bears, because here the stop loss for bulls are slightly narrow, and if you look at the risk reward wise, it's in favor of bulls. Now with the Bank Nifty to Nifty ratio chart indicating it is at breakout retest levels. Now if you look at the Bank Nifty chart as well, This is the Bank Nifty daily chart, and if you look at the rising channel or the bullish channel, price broke out at around 27,500, went up to around 32,800. In this recent momentum, where we have seen a selling pressure coming or the retracements coming back to 29,600, 700 levels, retesting those levels. And as I said, retesting is bullish breakout. Retesting is always a favor of bulls bear because they get a good risk reward. Now prices retesting the breakout level plus the 50 days average over year, both are coinciding at the same level of around 29,600, 30,000 levels. Now I think the bullish momentum which could next take a lead is the banking. And even if you look at the whole to March 2020 to January 2021, the sector rotation has been fast and furious. We started with FMCG and pharma, we moved on to IT, cement, autos. Banking was a sip of flavor, I would say. Then it cooled down again. I think that the bank nifty would be a good beneficial now into the leading rally. If the fresh momentum starts, you should clearly have focus on bank nifty, because I think bank nifty would be one which would be the leading. And do not forget, mid caps here are outperforming, and if you are focusing on mid cap stocks, especially the banking or the financial mid cap stocks, there could be some action you can find. But on the leading side, yes, bank nifty could be one which could lead the next leg of rally if the momentum starts on the budget day or post budget. But you should definitely look for banking space over here than any other sector. So that's all in the today's momentum moves video, and I hope you are liking the videos, this video series. And do not forget to click onto the subscribe button and do comment on into the video, so that it helps us to come up with more such kind of videos. Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.